We had average house prices increasing to almost 601,000 last month. So we are seeing a bit of momentum in the sector at the moment. But this is slightly at odds with what FNB's house price index shows, and that's a gradual deceleration.
Yeah, remember that we hit the bottom last year in September and August, and by March we actually saw positive growth for the first time. So a fairly strong pickup then from March to get to 8.3%. We don't necessarily say this is going to last. We expect to see a bit more growth in the next few quarters, but then towards the end of the year perhaps losing momentum again.
Now these are houses financed by Standard Bank that you're including here, aren't they?
Yes, indeed. That's only Standard Bank's book. So if you want to extrapolate that to the rest of the sector or the industry, you can do that, but we've got about 25% of the market, so it's not a small survey or sample there, but it's still only Standard Bank's book.
Johan, any idea of house prices are being achieved at this stage? So we're talking about inflation of 8.3% year on year. Are customers getting what they want for their houses? And how long are houses sitting on the market before they're sold?
I think it's still quite tight out there. Not many houses are being sold. I'm not exactly sure how long it takes, but it's certainly slightly better than what we had, let's say, a year ago. But we know we're near a very strong housing market at this stage.
Of course, we are in an environment where jobs are still being lost. We have high unemployment. Inflation is easing, but consumers still uncertain at this stage. When do you see a normalization for the housing market in South Africa?
Stephen, we will see next week when we get the numbers from the quarterly bulletin in terms of household debt, disposable income and growth in general. That will give us a better idea of the health of households. But I think it will take some time. We won't go back to the kind of growth rates that we've seen 3-4 years ago, where we had increases of 20, 25, 30%. So slower growth, households are under pressure, unemployment is still not picking up, and all of that is in a sense bad news for the housing market.
Mm-hmm. Are we also looking at quite low base levels from last year? So when we talk about 8.3% increases, are we looking from a very low base?
Exactly. We hit the trough last year, as I say, in September and August. So the calculations that we do now is off that very low base. And as we move forward, we will see an increase in prices, and therefore the base will increase, and that in turn will probably result in slightly lower growth rates.
How about the World Cup effects? Would you have expected prices to rise ahead of the World Cup rather than after it?
I think the World Cup was a bit of an anomaly. Listening to some people, they are saying that it wasn't really quite as big as they thought. I'm talking about companies like Kentucky Fried Chicken and some of the other companies. So it was really just, it seems to me, a very small portion of the hospitality sector and maybe the retail sector that has done fairly well. It did not really have much of an impact on the rest of the economy, and I don't think it had an impact at all on the housing market.
How about the real growth we're seeing at the moment? Because, of course, we have inflation sitting at 3.7%. So really, you're looking at real growth of about 4.6% in prices. Of course, we go into next week with the MPC, the possibility of a further interest rate cut. What's your view on that, and how could that impact on property prices going forward?
Yeah, it seems as if there's now a very good chance to see another 50 basis point cut on the back of an economy which is not performing too well, relatively low growth. We've got inflation at quite low levels, and the rand is very strong. Now, all of that points to a cut probably happening next week, and that, of course, will be positive for the housing market. Whether it will have a huge impact, I don't necessarily think so. Remember, we come from a situation where we had 500 basis point cuts over a period of time and not really impacting hugely on the property market. So it will be positive, but not resulting in a strong pickup in house prices, for example.